Another possible situation we need to plan for with bad and doubtful debts is our second example. How do we record bad and doubtful debts when it goes into negative? And what does that even mean? Well, it doesn't matter because we've got our three-step approach. We always take our income statement approach and step one, fill up the tank for this period. So we roughly estimate what or how many of our accounts receivable will never repay, and we call that the allowance for doubtful debts. So let's say we thought it was $4,000. Step two, use the tank when needed. Wait until an account receivable is actually declared a bad debt and update the allowance. So we had a balance in there of $4,000. Let's say an account receivable who owed $1,000 is declared bankrupt. Well, we're going to use $1,000 of that allowance. And step three, refill the tank up for next period. So update the balance of the allowance for doubtful debts without GST in the next period. So maybe we think we should allow for $5,000 in the future of accounts receivable to not repay, but we've only got $3,000 in there. So we would top it up by 2. So that was just the generic example, and that's probably the most logical situation that we would get. But what we're actually going to do is follow our procedure for a little tricky situation when the allowance for doubtful debts goes into negative. But we're going to follow the same 3 steps. So let's just use some different numbers. Step 1, fill up the tank for this period. On the 30th of June, make an allowance for doubtful debts of 2.5% of $80,000 net credit sales by recording a bad debts expense. So the first thing is we've got to figure out what that allowance is. So it's $80,000, which is net credit sales, times 2.5%. And if we do that, it comes out at $2,000. So what we've learned is for step 1, we always, on balance day, debit the expense. We're going to create an expense called bad debts, and we're going to debit it $2,000. And then what we're doing is we're filling up this tank, this negative asset called allowance for doubtful debts, by $2,000. And what that does is it's a negative asset, so it goes up on the credit side. So it fills this tank up to here. We expect $2,000 of accounts receivable in the future to not repay us, but we don't know who. So we just made an allowance here. So that was step 1, fill up the tank for this period. And maybe we get asked for a narration, we'll say allowance recorded for doubtful debts of 2.5% of net sales for the period Memo 1. Step 2, let's use the tank when needed. So at the moment, we've allowed for $2,000 of accounts receivable to not repay us. But what's different here is what happens on the 11th of July when an account receivable called Cosmo Kramer is declared bankrupt, but they actually owe more than we allowed for. We allowed for $2,000 of accounts receivable to not repay, but this guy actually owes $3,000 plus $300 GST. So what do? Well, it doesn't matter. We follow the exact same procedure. So if allowance for doubtful debts, which was a negative asset, went up on the credit side, 2,000, it must go down on the debit side here. So what we're going to do is take out $3,000 of this sale that the account receivable Cosmo Kramer won't repay us. And what that did to the tank is it not only used up the 2,000 we had in there, it used up another 1,000 here. And it kind of sent it into negative because now the balance, it was 2,000. It went down 3,000. So now the balance is negative 1,000. We'll decrease GST just like we did in our previous example because we now do not have to pay this $300 GST to the government, so our liability goes down. And accounts receivable also decreases by the combined amount of these two numbers. And accounts receivable is an asset, so when it goes down, that's a credit. We might get asked for a narration. Amount owing from Cosmo Kramer written off as irrecoverable Memo 2. So when we look at our allowance here, it's actually in negative. So we started at 2,000, we used up 3,000, so now we're all the way down here. Step 3, we refill the tank up for the next period. So at the end of July, we're going to make an allowance for doubtful debts. So it was 2.5% here, but clearly that wasn't enough because it went into negative, so we're going to bump it up to 3,000 here. So we're going to say the allowance is now 3,000 of $100,000 of net credit sales. So we're going to do the exact same debits and credits as we did here. We're just filling the tank back up. And the allowance this time would be 100,000 times 3% is 3,000. So we need to get this tank from negative 1,000 to 3,000. So our debits and credits will be the same. We're going to debit the expense called bad debts, and we're actually going to do it 4,000. And the reason we're going to do it 4,000 is that will get it from negative 1,000 in the allowance up to 3,000 here. So what that does here is we do allowance for doubtful debts, and it went from negative 1,000. We increased it by 4, so that increased it all the way up to 3,000, and that's what our allowance needs to be. And we would make a narration there saying allowance recorded for doubtful debts of 3% of net sales for the period. So that was a tricky example which does pop up semi-regularly, but the procedure was the same. Step 1, fill up the tank. Step 2, use the tank when we actually have a bad debt. Step 3, refill the tank up for the next period. The only difference was in the numbers. We just had to get it from step 2, from a negative balance up to a positive balance, and we just did that by increasing the number here. But the procedure is the same. So make sure you know these 3 steps, and you'll be able to handle any situation you get with bad and doubtful debts.